Well, it's a good question. I mean, part of the reason I say nothing stops this train is because, as you point out, the political incentives don't align around trying to control that any sort of like 2 to 4 year time frame. I guess if someone were really trying to stabilize this, um, it would start with changing the structure of spending around Social Security, Medicare, and defense. You have to kind of go blank sheet of paper. Do we need 800 foreign military bases? Is that keeping us safer or no? And what's the cost of all that? That's that kind of thing. Then it's like, okay, so we have systematically kind of made our food less healthy, and now it's kind of ballooning into really high healthcare expenses on a per capita basis. If you look at Japan, I mean, they're going through a significant aging problem. They're much more aged than us, but they spend something like a third per capita on healthcare and get better outcomes.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. In this video, Lyn Alden shares insights from Wealthion's Best of 2024, featuring her conversation with Anthony Scaramucci. Explore key takeaways on markets and strategy. Let's catch her now for more brilliance.
I think a large part of it is recency bias. And so people really tune themselves over what happened over the past 10, 20, 30, 40 years, basically the span of a career, depending on how long they've been in the space. Whereas some of the lessons of history that we can learn about the current period are things that are actually pretty similar to the 1940s, which really only you find in history books and long-term data analysis and that kind of thing, rather than anyone's trading career, investment career. And so the types of things that, or in the modern time, it's people that have managed money in emerging markets. They're often somewhat more well-versed on these types of issues sometimes because it comes up more frequently. So part of it, I think, is recency bias. I would note that basically over time, from talking to institutions, from seeing some of the financial media change over time, it is becoming more of an understanding of some of the things we're going through, some of the fiscal challenges we're going through, as well as some of the things that digital assets like Bitcoin or stablecoins open up to kind of the current macro situation, how they can be helpful, how they can be disruptive, depending on how you look at it. I do think over time, there's more and more awareness for these things that I've been covering.
Bitcoin traders are increasingly optimistic, anticipating a massive price surge to over $130,000 as market conditions improve with the return of traditional financial TradFi activity. On January 2, Bitcoin resumed its upward momentum, briefly touching $95,880 after a period of consolidation near monthly lows. This price action has reinforced traders' confidence that a breakout to new all-time highs is imminent, with many believing the next leg higher is just around the corner. Popular analysts, such as Dan Crypto Trades, have noted that Bitcoin's recent movements have swept liquidity on both sides of its trading range, establishing $95,800 as a key mid-range resistance level. Accompanying charts highlight increasing volume at range lows, suggesting that market sentiment is tilting in favor of the bulls. This trend aligns with a fractal pattern that mirrors Bitcoin's bullish trajectory in the previous year, further fueling optimism. Another trader, Joe, predicts a breakout could propel Bitcoin's price to between $130,000 and $150,000. Entrepreneur Jason Williams echoes this sentiment, envisioning a sharp rally within the first quarter of 2025. His analysis highlights a current accumulation phase resembling past cycles that preceded significant price surges. This view aligns with broader expectations that Bitcoin will benefit from a return of liquidity as year-end market rebalancing concludes. Cole Kennelly, founder of Volmex, suggests that the easing of December's hawkish Federal Reserve stance could usher in a broader risk-on environment. Such a shift is expected to attract significant capital flows into crypto markets, setting the stage for a bullish start to the new year. Many traders are eagerly monitoring for a breakout, convinced that Bitcoin's next price milestone is within reach.
During the pandemic, Powell called for more stimulus. So we kind of crossed the line where normally monetary policymakers don't, as a general rule, they don't really comment on fiscal policy. They try to be not kind of directly partisan. But he said, we've used a lot of our tools. There needs to be some fiscal support, right? So he crossed that line in that instance. What I would say now is that what we're seeing on the other side of it is that there's this kind of overflowing amount of fiscal hitting the market. But he's very reticent to comment on the fiscal side because he kind of goes back to the position of not really seeing that in his position. But I think at this point, a central banker, if they're trying to be kind of intellectually honest about this, it's time to say it's hard to do any of my mandates when deficits are this structurally big, because a central bank's tools are primarily designed around accelerating bank lending or decelerating bank lending. That's really what they're mostly geared toward. And we're in a fiscal dominant environment now, meaning that ongoing typical yearly fiscal deficits exceed the amount of new bank loan creation. And so those fiscal deficits are kind of a bigger impact on the economy in many ways than those bank loans. And they can drive things like inflation. They can drive things like nominal GDP running hot with some of the inflationary consequences that come from that. And basically it's saying, look, I don't really have the tools to deal with what's happening there. And so if you want those mandates to be in any way met, there has to be a fiscal response. And so right now it's kind of politically acceptable for central bankers or treasury officials to say, look, in the long run of time, yes, there's a fiscal issue, but then they always caveat by saying, we still have plenty of room. No one's going to admit that the actual road is kind of running into issues under their watch. And I think that there needs to be more transparency around that issue. So I basically would say, look, if you want me to be able to do my job, you need to rein in yours a little bit. Otherwise, I would resign and say, look, you put me in a position where I can't meet my mandate because I don't have the tools to meet my mandates.
The United States could be considering a monumental move to acquire 500,000 Bitcoin as part of a national strategic reserve, according to Anthony Scaramucci, co-founder of Skybridge Capital. Scaramucci hinted at this possibility during a recent appearance on the Bankless podcast, where he discussed the growing momentum behind cryptocurrency adoption at the governmental level. President-elect Donald Trump reportedly supports Senator Cynthia Lummis' proposal for a 1 million Bitcoin reserve, signaling bipartisan interest in the idea. Scaramucci highlighted the critical role of Senator Tim Scott, who is set to chair the Senate Banking Committee. Scott's leadership could prove instrumental in advancing this initiative, reflecting a growing recognition of Bitcoin's potential as a strategic asset. Bipartisan support, including enthusiasm from younger Democrats, underscores an evolving shift in attitudes toward cryptocurrency within Congress. Bitcoin's emergence as digital gold is central to this narrative, with the U.S. already holding over $600 billion in gold reserves. Incorporating Bitcoin could diversify the nation's strategic holdings. Scaramucci pointed to China's reported Bitcoin accumulation as a pressing factor, warning that delays in U.S. action could diminish its global financial influence. Despite Bitcoin's increasing adoption, Scaramucci emphasized that it remains an opportune time to invest, given its growth potential. He suggested this move could catalyze broader institutional acceptance, drawing capital from central banks, financial institutions, and asset managers worldwide. If realized, the proposal could mark a turning point in Bitcoin's role on the global stage. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.